monitoring, and you've done such a great job with these. And it's through Emily's efforts that we're able to offer these to our clients. So thank you, Emily. As we get started, we will try and interject questions here, and I will kind of play that role of interjecting your questions. We'll do our best, as Emily said, to answer all of them as we go along. We're also going to solicit some feedback from you via polls. So if you would please host our first poll. Our first topic is going to be on the payment protection program, and we've got a poll to start that off. Have you applied for payment, and which of these applies to you? And then we're going to kick it over to Kate to talk about, and I have several application questions for her to respond to after she gets a chance to look at the poll results. Are those results pretty much in, Emily? Awesome. It looks like the majority have applied or are thinking about in that process. So that helps a lot. And Emily, if you would take us to past the disclaimer slide, the second slide, that'd be great. So Kate, in the application process, first of all, for those who haven't applied, they're thinking about it, what would you advise?
The absolute first thing that you should do if you're still thinking about applying is to make sure that you talk with a banker. We aren't a part of the application process. We aren't a part of the lending process. So the first thing you'll need to do is contact your bank. Most banks will let you know if they're an SBA approved lender. The bank does have to be an SBA approved lender for you to be able to apply through them. So you'll make sure that they are. If you don't already have an established relationship with an SBA lender, you'll want to do your best to search out and find one. Since the application process has been open for a few weeks now, there have been more lenders that have been approved, and more lenders are open to working with people they don't already have an established relationship with. So you're more likely to find a lender that's willing to open a deposit account for you and be a lender in this process.
That's a great lead in then to the second question about the bank that they have dealt with has not responded. So can you apply through more than one bank or have contact with more than one bank?
You can apply through more than one bank. I have seen a number of clients and organizations do this when they're not getting a great response from the first bank they apply through. The important piece to note is that you can only get one loan. So you can only have one PPP loan. You can't get multiple PPP loans through different banks. You can apply through different banks, but you will only receive one loan if you're approved.
Awesome. Now for nonprofits, you know, as you've been dealing with the questions too, the form is not geared towards not-for-profits. So how do not-for-profits express and fill in the piece and answers to some of those certification questions?
Absolutely. So we have answered, between Melody and I think we've probably answered this question a few hundred times because it doesn't really make sense as the form currently is stated for nonprofits. So what we are advising, the person that needs to fill out the form should be an authorized representative, so somebody who has the ability to sign legal documents, loan documents. For me, that might be a board chair or the treasurer. Some have bylaws that are written that state the executive director can make decisions for the organization on the board's behalf. You just want to make sure that it is somebody that has signing authority. When you fill out that applicant ownership section, you are going to need to put something in there. Most bank portals will not allow you to bypass that question, so you're going to have to put somebody's information in there. We just recommend that you put 0% ownership. You are able to do that. I've had many clients be able to get through the application process by listing the authorized representative's name with a 0% interest.
Perfect. Thank you so much. And the last question I had in the application process, somebody answered in the chat already, which is awesome because we love that interaction. That as of yet, we have not seen anything projected for C6 eligibility down the road for this. Yeah. Can't get to this in a second, but the last I heard, there's still a little bit of money, not a lot. And, they are projecting potentially extending it or putting more money into the pot, but nothing is set yet. Do you have anything to add to that, Kate?
I don't have much more to add. At this point, as of today, there hasn't been much more guidance as to who, any additional organizations that this is going to roll out to. I did on a webinar that had a senator speaking yesterday, and they spoke about Bill 4.0, which is hopefully going to be coming out in the next few weeks, that would extend additional funding and hopefully reach out to more organizations. I have seen a number of petitions going around specifically for C6s that want to make sure that they're included. So if you do see anything like that, certainly power is in numbers. So if you see anything like that, make sure you sign on. But at this point, there is no direct guidance from the legislation saying that they are typically going to roll it out to other types of nonprofits at this point.
Terrific. One more chat question came in while you were answering that. The form from this person said it required social security numbers of the authorized person. Have you experienced that or seen that?
Yes, it does ask for basically background personal information for whoever is signing who is signing the application. Again, I don't know that there's any way that you can bypass that. I have walked through the application process for banks that have online portals where they fill out this information, and those are required fields. So the person that's signing the form, who is the authorized representative, will need to provide that information.
Great. Now, as Kate's slide says, she's going to talk just briefly about the covered period and eligible costs. We're going to spend more time on the last two bullet points again, because we're trying to gear this to the specific questions that you've had come in. So I'll turn it back over to Kate.
Sure. So I did just want to make sure that everybody has a clear understanding of what the covered period is and what the eligible costs are. As many of you, it looked like, have either applied and received funds or have been approved and are waiting for funds. It's going to be important to know what the covered period is and what you can spend the money on. The tracking spending, I know we did have a number of questions about the covered period. So just to make sure everybody has a clear understanding, there is a covered period for which you can use these funds so that they are eligible for forgiveness. It is an 8-week period, and much guidance is referring to it as the covered period. And that 8-week period starts the date that the loan is dispersed to your organization. So as soon as that money hits whatever bank account you've put it into, when the bank actually disperses the money to you, that is when the 8-week period starts. So you don't get to choose the 8-week covered period. It starts the day that the money is dispersed to you. The eligible costs that you can use this funding for are payroll costs and a few non-payroll costs. The payroll costs are the biggest piece. That is, you can use it for gross salary. So not net salary, not the amount that actually comes out of the bank account. It is the cost to you as an organization to actually employ your employees. So if somebody gets paid $50,000 a year, you're able to cover that $50,000, not the net pay that they receive. You can also use these funds to cover state unemployment taxes paid by the employer. So for most organizations, that's really just going to be state unemployment. You can use it for any other state and local tax that is assessed to the employer. In most cases, state unemployment is going to be the big one, but there are other jurisdictions that have taxes that are assessed at the employer level. You can also use it for the employer portion of group health insurance premiums, and you can use it for employer contributions to retirement plans. The non-payroll costs you can use it for are rent, utilities, and interest on mortgage obligations, and that's it. Melody, you're muted.
Thank you. Wanted to not detract from everything. Thanks for pointing that out. On the tracking and spending, we've had a number of questions about, do you have to have a separate bank account to ensure accountability? And if not, and or in conjunction with that, what are the best ways to track these funds for forgiveness?
Sure. So my recommendation to everybody that I've talked with is, if you can, absolutely have a separate bank account. This way you can use it similar to a clearing account, which, if you're not familiar with what a clearing account is, it's essentially a holding account that you can use to kind of track your expenses on a much more straightforward basis. So you have a checking account that you pay your payroll out of, or you pay your rent out of, and you maintain that normal checking account, but you have this separate account with your PPP funds that you can transfer the money that you need to use to pay those eligible costs into your checking account when you need it. This is going to be, in my opinion, the absolute most easy way to track these funds and ensure that you have the proper substantiation when it comes time to calculating the loan forgiveness. At this point, we don't know exactly what bankers are going to be looking for as backup documentation to ensure that you spent the funds in the correct way. So the biggest advice I can give is document, document, document. We're accountants, so we tell you that anyway, and Melody are auditors, so they probably say it even more than I do. But if there was ever a time to document, now would be the time to do that. So if you can keep it in a separate bank account, I would absolutely recommend that, and only transfer money into your checking account when you have a valid expense that you need to cover. Otherwise, if you don't have that as an option, it's not a requirement, so you don't have to do that. We would recommend, if you're in an accounting software, setting up a separate cost center. I think Scott's going to talk a little bit more about some of the specifics when it comes to tracking for nonprofits, but any that you can ensure that you have some sort of documentation that is a substantiation for the expense that you use the funds for is going to help. You're going to have to keep very good payroll records if you don't have a payroll provider. You're going to want to make sure that you have copies of invoices for your health insurance premiums, copies of invoices for your employer contributions, canceled checks for rent, canceled checks for utilities, bank statements that show the amounts that were paid. More is better than less.
Great. Now, I want to jump to loan forgiveness because that's where the bulk of the questions are. And I'm going to jump with a couple from the chat just to make sure that we don't miss them. One question is, if the money is dispersed April 20th, can you include payroll costs from April 1st? And the other relates to that, can you use the funds to go back and pay employees retroactively for time missed? You're going to cover that with the other question that's answered is, what is the 8-week period? So I'm going to turn it back over to you for all of that.
Sure, absolutely. So, as Emily kind of stated up front, guidance has been changing on a day-to-day basis. So the guidance that I'm giving you now is up to date as of yesterday, as of this morning. But just know that some banks are doing things differently, tracking things differently. We've had the opportunity to see 20 or 30 different, loan calculators and loan request supporting documents from banks. And I can tell you that just about every one of them are different. So it's important to stay in touch with your banker and make sure that your banker has a reasonable understanding of what they need from you, and you have an understanding of what the banker is looking for. This guidance is based on, the Treasury and the SBA and the frequently asked questions that have been put out. But that 8-week period, again, does start the date that the loan is dispersed. And essentially, you're looking at it on a cash basis. So we're looking at cash out the door. So if you got your funds dispersed to you on April 20th and you have a payroll that's coming out of your bank account on April 21st, then that amount is going to count towards your 8-week period. So you kind of just have to think, I know probably a lot of the folks on the phone may be audit or review clients, and so you're used to maybe hearing about GAAP and accrual basis. Well, that's out the door with this a little bit. We're really thinking about that 8-week period is on a cash basis. So it's going to be the cash you spend in that 8-week period is what's going to be includable in the spending.
Thanks, Kate. Awesome. If they don't spend all of it on payroll, what other expenses can they spend beyond those eligible costs you mentioned of mortgage, interest, rent, and utilities?
So I have responded to that question a number of times, and this is my guidance on that question. On the SBA application itself, you do have to initial and you have to provide some certifications. One of the certifications states, and I'm reading it verbatim from the application, it says, Funds will be used to retain workers and maintain payroll or make mortgage interest payments, lease payments, and utility payments as specified under the Paycheck Protection Program rule. I understand that if the funds are knowingly used for unauthorized purposes, the federal government may hold me legally liable, such as for charges of fraud. So my interpretation of that is that you must use the funds, whether forgiven or not, for the eligible costs that have been identified. That's coming straight from the application. I have seen other folks interpret it as if there's an amount that's not forgiven and you didn't use all the funds, it just becomes a normal loan. What I can advise is that you read the loan documents very closely. You talk with your banker. If you have a lawyer, I highly recommend that they read the loan documents before you sign anything. That is the certification that you made on the SBA, the PPP application itself.
Awesome. A couple more questions that have come in on the chat. Can I put those funds in an interest-bearing account as I'm using them?
That is a great question. I haven't seen anything that says you can't. Again, I would highly advise that you read the loan documents thoroughly. That's likely going to be in the loan document somewhere that states how you have to, if you have to put it in a checking or in a, a non-interest bearing, or if you can put it in an interest bearing account. I don't have an answer for that off the top of my head, but that is a good question and we can look into it further.
Another one is, in that state and other local taxes, does that include property tax on a building that they own?
That is specific to payroll taxes, state and local payroll taxes assessed to the employer.
Great. Now, another big thing with the forgiveness piece is the head count versus the cost. I'm going to read you one specific question here.
Okay.
2019, our payroll calculation is based off of staff compensation that was all below 100,000 threshold. But in the new year, they have one over 100,000. Does that salary have to now be excluded for forgiveness?
So the entire salary itself wouldn't be excluded. So per the Department of Treasury guidelines, the eligible payroll costs that you can use the money for is still capped at $100,000 on an annualized basis per employee. So the payroll costs for that employee are not excluded, but they are capped at whatever the annual salary would be for that person if they capped at $100,000.
Awesome. And then just to follow up on your cash question or cash piece on the loan forgiveness, can I prepay health insurance then?
I did look a little bit into that as well. I know that was a question that was submitted beforehand. I could not find specific guidance on that question. My interpretation is that these funds are intended to be used for that 8-week covered period. So that covered period is what the expenses should be included for. So that would, in my opinion, that would be 2 months of health insurance premiums and 2 months of employer contributions. I did a little digging to see if I could find anything related to that. I couldn't find anything specific, but I would advise that it is specifically for the 8-week period.
Awesome, Kate. We so appreciate all of your knowledge here. We will come back to Kate in a little bit. I know you probably have other questions. Remember that Q&A feature is there. We will follow up on those after the fact because we realize we have limited time here. Could you please put up the next poll, because we're going to turn it over now to Scott to talk about some operational considerations, because this is, in addition to the regulatory pieces, how do you manage in crisis mode during this time? So Emily, do you have that second poll up? There we go. What do you think will save your organization? Pick any that you think will apply. This will guide a little bit of what Scott's going to talk about, and we want to help you with, in addition to these government programs, just some of those operational and cash flow and reserve kind of questions. All right, Emily, let us know when you think you've got.
Sounds good. We'll give people a couple more seconds just because they're reading all the.
Okay, and then you can flip to the next slide too, if you would please.
Perfect. There we go.
All right, Scott, you're up.
Wait, Melody, are we going to do the other poll question?
Yep, we certainly can. Do you want to do that right now as well, Scott?
That'd be great. Thanks.
Awesome. There you go. So this one's just a select one. What best describes your current situation?
Thanks for jumping in there, Emily.
Yeah, absolutely. We'll give people a couple more seconds. All right, and there are those results.
So does that help you, Scott, form your thinking?
Yes, thank you very, very much. Yeah, this is interesting looking at this. About 50% are feeling that it's going to be okay, and then 50% we have some significant concerns. And Melody or Emily, can you put up the other poll results? Thank you. So really a combination, and of course there are multiple answers, but leadership seems to be important. Reserves are important in revenue streams. Cost cutting is occurring. Stimulus programs, I guess, pretty much across the board, other than reducing and eliminating programs, which sounds like a nonprofit way of doing business. We're going to cut programs last. Well, I'm really glad to be with you today. I apologize right at 10 o'clock when this started. I live in an apartment building downtown, and they decided to start drilling outside my window. Moved around. I don't know if you saw the guy in the back. I showed you all that. I'm actually in my bedroom right now, and the internet's not very good. But so if we have a challenge here, just put something in the chat, and I can maybe try to move to a different room. This concept of sustainability, which we've been talking about in our sector for a long time, has moved to something that I'm calling survivability. In 2008, I was interviewed by the Wisconsin State Journal, sort of the state of the nonprofit industry in light of that downturn, and at that point, I was quoted as saying, I should pull that out sometime, that I felt that as much as 20% of the nonprofits would either go away, merge, or see themselves in some less significance than they were then. It was just a guess, just trying to determine based on reserves and some of the things we saw in the poll, what people were going to do, what nonprofits were going to do to survive. I think sort of post 2008, that number is probably more like about 5%. So I'm really encouraged by the fact that we have as a sector survived in the past, and that we'll survive again. I think the poll, we have more than 150 people on this webinar right now, and the fact that less 50% or more were either concerned that they're going to continue, or that it was in serious doubt if this is a sustained pandemic, and so that actually has to have significant concerns for our sector, and the fact that the number of things listed there that were planned activities to survive this period was encouraging. Stimulus, reserves certainly play a big role. In thinking about my comments today, I've jotted down 12 things that I thought were important for each of you to consider as you're moving forward.
Scott, can I interrupt you just for a second?
Yes, please.
Can we jump back before you dive into these points, which are very important, to get your take on the recording aspects, especially the relationship with federal money in terms of the PPP loan?
Yeah, you know, and we maybe skipped over a couple of questions that I was going to respond to. And
yeah, I can give you a couple if you want them.
Yeah, you know, I think I'm fine. Let me just make some general comments. So we received at least 10 questions about the relationship between the PPP and government funding. And this is definitely a moving target. We don't know exactly what's going to be the final rules with this, but and I've had individual conversations, I know, even with people that are on this call. You have to be concerned about the concept of what's being called double dipping. If you receive a direct federal grant, it is very clear that that money, if it's being a reimbursement grant, covering salaries that's being reimbursed by another federal program, that you're not going to be able to use those as eligible payroll costs under the PPP. What gets then to be a bit murkier is when money passes through the feds to the state, and then of course to, I'm going to assume most of us are in Dane County, let's say Dane County, and things happen to the money along the way. The state adds some money, funding to that program. The county certainly, many of their programs are general purpose revenue dollars. The federal character of that changes as that money is passed through. Any indirect federal pass-through money, again, probably will be conditioned on this concept of double dipping. The question becomes then, well, what happens in some of these grants where it's unclear the nature of the federal or the local money compared to the federal money? As Kate was suggesting here, and I think it's great advice, separating your funds into a separate bank account is important. Separating these funds, I think, in the accounting system is going to be equally important. So for instance, if you have certain administrative costs that you know that are not being reimbursed by the federal government or by pass-through grants such as fundraising, certain other ineligible administrative costs, those could be tracked separately and reimbursed. And then what happens when you have commingling of other grants and state and government funding in a program? What do you do with that? I can say at this point, we don't know for sure, but I suspect, and maybe there's some people from the county on this call, that Dane County and others will be very interested in any funds that are being received by any of you that are also being reimbursed through reimbursement grants. I think there may be some flexibility in some of the fee-for-service programs that are being paid for by the by government units, but it really remains to be seen exactly what's going to happen. And you know, the important thing at this point is if you can keep those funds separately allocated in your accounting system, at such point that we have more information as what might be allowable as reimbursement and not be treated as something I might call program income. The PPP being treated as something called program income under federal cost guidelines. There may be some opportunities for you to capture some of these funds and not be concerned about double dipping.
One follow-up question before we move back to survivability is, as auditors, for our clients that are on the call that get the audit, what is be the audit responsibility for digging into how these funds are spent and for how they should be recording them on their books?
Yep. So for those of you that are subject to audits and any of those that are under government auditing standards, we will as auditors, have to be concerned about compliance with laws and regulations. That's a general audit requirement. And at the time of the audit, I believe we'll have a lot more information available and knowing what needs to be done at that point in time. But these funds will be subject to audit at the independent level. I think there were some questions, Melody, about whether or not the bank was going to audit these funds, and that's not, at least as far as I know, not the case. You're going to provide certifications, and those certifications may be subject to audit by the SBA or other parties, but at this point, there's no planned audit of that. If you have an independent financial audit by a CPA, that CPA will be required to consider your compliance with laws and regulations as they're interpreted at the time of the audit. So, for June 30th year ends, this becomes probably a lot more important than December year ends, where we'll probably have a lot more information. At the end of the slides, Melody, there's a link to a White House memo on this. OMB just published some information recently that would be helpful. The AICPA Government Audit Quality Center also had a FAQ on this, and there's just a lot of unanswered questions. So I would love to answer all these questions and say definitively to people, yes, you can do this. My best advice at this point, to maybe cut this a little short, is maintain the separate bank accounts. Create in your accounting system separate classes or cost centers to track how the money is spent. And Kate and I even talked about this yesterday. Even consider maybe billing yourself. So what I would consider inter-fund billing invoices to show very clearly what costs are being paid for with the PPP funds.
Awesome, Scott. Now, as you move to this, one of the other things that borders between just good operations and what we've been talking about with the programs is internal control. Can you use that to then segue to the things that you're suggesting?
Yeah, on the slides, Melody, can you go back to the one previous to this?
Sure, Emily will.
Or Emily, thank you. So I have 12 things here that I felt were important for each of you to consider, and we'll just take 5 minutes because we do want to get your other questions answered on EIDL and anything else that may come up. But this is so important to get your board engaged in both planning and decision making. I'm hearing lots of great stories of boards meeting, emergency meetings, variety of meetings to determine what are the next best steps. The best way to do planning and decision making is to have as much information as you possibly can. Of course, you're dealing with uncertainties that we don't even know. For instance, when is the state of Wisconsin going to be out of safe at home? So that means that you have to do both short-term and long-term scenario planning. And I call these scenario budgets. And so you might come up with 2 or 3 or maybe even more scenario budgets based upon a set of circumstances that you might expect both in the near term and the long term. There's a lot of questions, a lot of board meeting discussions and so forth on what to do with reserves, how much of the reserves should you commit, and what would be financially prudent. Clearly in 2008, and I can say this is across the board, a very large number of nonprofits dipped into their unrestricted reserves to sustain operations. And in many cases, these might included board designated endowment funds. Now, board designated endowment funds are still considered unrestricted, at least to the donor, and not permanently restricted, so those would be available as well. and that, and knowing how much you're willing to commit. And so I've heard stories of boards saying that we're willing to commit X amount of our reserves to sustain our operations in the near term. But remember too, and this is perhaps a challenge, is you don't know how long this is going to last. So if we knew what the end of this was going to be, it'd be much easier to know how much to commit. So you wouldn't necessarily want to overcommit in the short term, knowing that there's long-term sustainability, survivability required. And so realizing that reserves and what you're willing to commit play a role in that. What is very clear, so looking back to 2008 was clear, is that nonprofits want to maintain their level of services when the corporate world is cutting back and laying off and doing other furloughs and so forth. Nonprofits are committed, our industry is committed to continue to provide service, and often will commit resources to things to sustain operations at the risk of survivability. And that's a very careful balance that you'll have to make. And being realistic about fundraising goals, just know there's other more experts on this call probably than I, but know that corporations are the first to pull back giving. Large wealthy donors sometimes are often when they see their net worths reduce, might be reluctant to in the short term give. We know the opposite is true. That at times people give more. What we saw in 2008 is organizations had a large number of small donors often did much better than organizations that had a small number of large donors. Next slide, Emily, if you don't mind. Cash flow budget. So this is, you really have to watch this. So it's not just your operating budget, but making sure that you're doing a cash flow budget. And if you have any cash flow concerns, doing that on a weekly, certainly a monthly basis, if not longer. Reducing variable expenses. This is what corporate America is doing. They're looking at every single expenditure and determining whether or not that's necessary. And this is probably an area, you know, our nonprofit sector is often the last to reduce workforce, but will when necessary. Looking to collaborate with other partners to share expenses and resources. This is, we talked, was on a call with community shares talking about what the members there can do to share in resources and reduce costs that way. Utilize all federal and state stimulus programs. You know, we get this, I've gotten this question a number of times, should we apply? And I have concluded that there is no reason not to apply for this.
Scott, on that one specifically, how do you address the certification and need? What's your definition of need?
Well, just maybe to finish my comment on that, first, that I was on a national call of CPAs around the country who are serving nonprofit organizations, and this conversation sort of came up, and there was a story of a nonprofit in on the East Coast had $40 million in reserve, and the board had a heated discussion, and I've heard this comment said before, is there sort of a moral issue if there isn't a perceived need? Should you still apply or not? And apparently, from what I heard in that conversation, it did pass, that they did apply on a 8-10 vote. As it relates to certification of need, Melody, I don't know if Kate, you want to jump in on that. I know I generally. What's that?
It's more the question, people are wondering, just because of the uncertainty, does that create need? And if I'm still able to offer program services, or I'm an essential business, I still have some loss, but is that enough need to justify me applying?
So Melody, what I, at least I've read on this, is that it's really considered, it's very easy to pass the test, the certification of need. So CPA firms are applying for the PPP program. So businesses are applying. If we don't, as a sector, capture this money, it's going to go, and you know how limited we are in our resources. Absolutely, we should apply. And Kate, you can disagree with me.
Nope. I will be honest, I struggled with the same questions when advising clients as well. But I think the certifications were intentionally, some of them fairly broad, especially when it came to the uncertainty question, because the reality is we have no idea what the future holds at this point. So really, it doesn't matter how great you think you're doing right now and that you can sustain. It's uncertain for everybody. It doesn't matter who you are, what line of business you're in, for profit, not for profit. And I think that specific certification was intended to be broad so that it could cover as many people, all people as possible.
And then the moral, ethical question of whether you should apply for it or not, I guess that's an individual case-by-case basis on boards. Emily, can you go to the next slide? And Melody, I'm just going to take 2 more minutes here, maybe give you an opportunity to speak. We saw that reduce or eliminating programs, that was probably the least of the strategies in the poll that people are considering, but this is what for-profit businesses do, maybe not what nonprofit organizations do. Utilizing professionals, I have sort of a happy thought at the end that, we exist for good and not for profit or gain. But this concept of disruptive innovation, Melody, do you feel like you have time you could jump into that? Or?
Yeah, it's something that we talk about a lot in things that I get to consult on and work with nonprofits on, is that for-profit businesses see this, and they see this as an opportunity to do new things. Just a couple of quick examples. An organization shifted what they were doing in terms of having supplies and the resources for sewing to making masks and other equipment. Or food, having the ability to pay or provide for actually a greater number of people that are now under a need in a way that was safe, and redefining somewhat their processes to make that happen, are just a couple of examples of a crisis type of disruptive response, but it's something that can be much broader, even beyond that.
I think maybe I'll end my comments at this point, Melody, and I know we have some other information we want to provide.
Awesome. Thank you so much. Emily, will you please put up the next poll? We're going to shift back then to loan programs and regulations, and looking at the disaster loan, or the EIDL. Go ahead and respond to this, and then we're going to turn it back over to Kate. So if you can advance the slide, Emily, that'd be great.
So while people are answering this question, I see that somebody did just post an update in the chat if everybody's looking, and we did want to make mention within the last hour, the news has come out that the PPP loan program is out of funds. So timeliness, of course, while we sit here and talk to some folks that haven't applied for the loan at this point, you won't be able to until another bill comes along that has appropriated more funds to this program. But if you do a quick search in the news, and somebody did include a link to a news story, it looks like some of the earliest news came out probably about 45-50 minutes ago. Likely while we were all getting set up ready to give you some more information, that the funding is officially gone, which I did a webinar for our for-profit clients yesterday similar to this, and we did state that the likelihood was, if you haven't applied by yesterday, it's going to be really difficult, because we expected the funds to run out probably this week, maybe next. So it looks like, unfortunately, we did predict that pretty well as of yesterday. So at this point, just so everybody on the phone does know, if you hadn't applied, you won't be able to apply at this point right now. They haven't approved any additional lenders, and there isn't that $349 billion that was allocated to this program has been exhausted. So of course, we will continue to keep you updated as new bills come along and as additional funding comes along, but just want to make sure that everybody has that information so that you can go forward in making decisions in the your immediate need right now. So with that, the other loan options become that much more important if your organization is needing it. So based on the poll, have you applied for the economic injury disaster loan? It looks like most people said no, but they're interested in learning more. I have seen that that's been the answer to this question more often than not. And I think that has a lot to do with the fact that obviously the PPP loan process was much more advantageous. And so people locked onto that program as opposed to utilizing the economic injury disaster loan program. In addition, if you're located in Wisconsin, the funding for the economic injury disaster loan program actually just started. So if you were a part of that process before, let's say you applied for this economic injury disaster loan prior to March 30th, you actually must apply again. So the SBA has changed the process a couple of times actually since this rolled out. So if you applied for the economic injury, disaster loan, you must apply again before March 30th. You must apply again. It's a very much a streamlined process to apply. You go directly to the SBA.gov website and you apply right through the website. So you do not need to have a relationship with an SBA approved lender. So that's important to note. So Melody, I know we didn't have a ton of questions that came in beforehand. So I'm maybe just gonna talk a little bit more about some of the items that I highlighted here. And I will make sure to address the one question that we got beforehand. And then if we got any other questions.
That'd be great. And since obviously the timely information here with the PPP funding, yep. Feel free to field questions, and this is even more important.
Absolutely. So the Economic Injury Disaster Loan Program, as it relates to nonprofits, actually many more nonprofits are eligible. So if you are a C6, you are eligible for the Economic Injury Disaster Loan. If you are a C4, you are eligible for the Economic Injury Disaster Loan. At this point, there really aren't many likely exclusions if you're a nonprofit and you're applying for the economic injury disaster loan. So if you were already not eligible for the PPP, I'm going to refer to it as the EIDL. We're all about acronyms. So that you are eligible for the EIDL. So I would highly recommend exploring this as an option. The EIDL is, like I said before, you work directly with the SBA. So you do not have to have a relationship with a bank or an SBA approved lender. The application process is pretty straightforward. I've walked through it with a number of clients. It takes about 8 to 10 minutes to walk through the steps. You go to the SBA.gov website and it'll walk you, just follow the links to get you to the application process. And it walks you through step by step. There are about 5 steps that you have to, with questions that you have to answer. I will tell you that there is a question about ownership, so very similar to the PPP. Again, I have walked through the application process with a number of clients and I saw somebody in the chat mention that they were not able to use 0% as the interest or as the ownership interest. As it relates to the application that you fill out online, I have a number of clients that were able to get through the application process with putting 0% in. If a loan officer comes back and says that you have to change that, I'm not familiar yet enough because we haven't had many people actually be approved for the loan yet. But as of a week or so ago, walking through the application process online, you are able to put a 0% ownership interest, and it'll be the same as we talked about with the PPP in regards to who is signing and who is putting their information in the loan application. the only numbers that you're going to need to have to fill out the application for the economic injury disaster loan is going to be your gross revenue and your cost of operations. So those are the two numbers that you're going to need. The application says using the year end January 31st, 2020. So I would use that date. So you're going to have a 12-month period, February 1st through January 31st. I've had a couple of clients that just used their 2019 data if you're on a calendar year. Again, a loan officer is going to be in contact with you after the fact to request any backup supporting documentation. So you can, if you prefer to use your 2019 numbers, however, the application does state that you should use the 1-year period ending January 31st, 2020. So there are two pieces of the EIDL program. Many of you have probably heard of the up to $10,000 grant that is associated with the Economic Injury Disaster Loan Program. The only way to apply for the grant is to apply for the loan. So I believe it's step 3 or 4 in the application process. It will ask you if you want to be considered for the up to $10,000 grant. You put yes or no. If you put yes, it requires you to put bank information that you want that money to be deposited into. And somebody will let you know. It should be within a couple days if you've been awarded that grant. I have seen that a number of clients have begun receiving the grant. As it states, the grant is up to $10,000. And what we've learned is that it's actually based on $1,000 per employee. So if you have 1 employee, the max amount of the grant that you'll get is $1,000. If you have 20 employees, the maximum grant amount you'll get is $10,000. Now that grant does not need to be repaid. Oh, yep, go ahead.
I just want to jump in with a couple of quick questions, if you don't mind, from the
Sure.
chat.
Absolutely, yep.
One is that, are there still funds available for EIDL? The last I knew, and you can answer this as well, is it was as precarious as the PPP funding that it's close to running out, but I have not received notification of it running out yet.
So the EIDL program there is a federal funding piece. However, each state had to apply for a specific amount of funding to be able to administer the program. At this point in time, I sat on a webinar last Friday with some of our Wisconsin SBA representatives. And again, I'm speaking to Wisconsin, being in Wisconsin. I'm not as familiar with the other states where they're at with the program. But in Wisconsin, as of last Friday, they had not started administering any of the funds at this point because they had updated their system a number of times, and they were working to get a process in place to be able to begin appropriating funds to those who applied. So at this point, I don't have information as to how close they are to running out of funds. My guess is that with news of the PPP running out of funds today, there's likely going to be a run on this loan application. So if you haven't applied for this loan and you want to, I would highly advise that you do it right now because it's probably going to be the same.
Another question came in. Somebody said that the U.S. Chamber of Commerce session on the SBA loans site indicated that there has to be a guarantor. So doesn't that preclude not-for-profits from applying?
So there only has to be a guarantor if you end up receiving a loan of more than $200,000.
Great. And
guarantor required.
Can you clarify the time frame, because somebody's a little confused? They heard 2 different time frames.
Time frame for funding or time frame for
Yep.
The difference with the EIDL is that it is essentially a working capital loan. So there is a forgivable portion of the loan. For nonprofits, it will be a loan that you receive. The interest rate is 2.75%, and the repayment terms are based on what your ability to pay is, up to a repayment term of 30 years. So it is a really low interest rate, and the repayment term is not as quick turnaround as the PPP, where the PPP is a 2-year repayment term, but only at 1% interest. But the economic injury disaster loan can be used for basically anything you need to continue operations. So there aren't the same restrictions that the PPP program has on the way in which you can spend the money. The key is, if you did, excuse me, if you did receive a PPP loan, and you also apply for the EIDL funding, you cannot use those loans for the same thing. So again, it goes back to tracking and documentation. And this is the same if you've ever, probably most nonprofits have never applied for an SBA loan before because you didn't qualify. But this is a standard SBA loan process in which if you were to apply for 2 SBA loans, you cannot apply for them to use them for the same thing. So the same goes for the PPP and the EIDL. If you receive both, which you cannot use them for the same costs. You can't use them for the same expenses.
Great, Kate, I'm going to jump back in here because we're nearing the end and we didn't get to the very last slide today, and that's okay because some of that information is in a couple other webinars we've recorded, and I'll be happy to answer any of those questions. Like Emily said at the onset, we had a lot to cover, so thank you for bearing with us and allowing us this time. We realized we were not necessarily able to answer all questions, so remember that before you log out, if you want something answered, please add it to the Q&A. And I'm going to get back to Emily for some of her final comments as well.
Yes, awesome. Thank you so much, Melody and Scott and Kate. We went over a ton of information today, and hopefully we answered a lot of your questions that you submitted before today's presentation and during the presentation. So I just want to say one last time what Melody said. If you have a question in the Q&A chat or a question that we didn't answer today, please throw it, in the chat box, please throw it in the Q&A box so we can answer those. We run a report afterwards and we'll get back to you as soon as we can because we know this is really confusing and obviously things are changing daily. So thank you so much. Everybody will receive the link for the recording of today's webinar along with these slides so you can have those resources that Scott referenced earlier. So thank you all for your time today. We so appreciate you joining us, and thank you presenters. Have a wonderful rest of your day.
Let me jump, actually, I'm going to one more second since we have a minute left here, just to say that we will keep you updated. We are continuing to issue our nonprofit newsletter once a week with updates, as well as the COVID site on our webpage with resources, and those will continue to go out as we get more definitive answers. We will definitely answer those. In terms of specific to nonprofit, we are actually hosting a couple other short kind of question with a little bit more structure, but around your questions. One for religious organizations next week, another one on donor funding. And we also probably either next week or the week after are going to expand on what Scott was talking about survivability. So look for all of those, or let us know if there's something else that we can do to assist you. Thank you.
Emily, can you put up the last slide? Emily,
Yes.
Can you put up the last slide?
Yep, so here's what everybody will be receiving. Anything else, presenters?
Oh, thank you.
Sounds good. Thank you all so much. Have a great rest of your day.